Welcome back to the 10K SOXL Trader Challenge Day 57. This episode is the recap for the November 4, 2025, Tuesday, trading day. One test trade today, stopped out according to discipline. Market overview. Tuesday market sold off across the board with semiconductors leading declines. Three major indices all down, with Philadelphia Semiconductor Index, SOX, falling approximately 4.0% on the day. Multiple Wall Street bank CEOs warned of potential 10 to 15% pullback risk, suppressing risk appetite. In weak environment, single test trade failed to continue, stopped out according to discipline. Daily operations and execution. Capital-based. Available capital per trade is $10,636.26. Day 56 ending balance. Orders placed in whole shares, without leverage or margin, ignoring commissions and slippage to maintain statistical consistency. Position sizing rules. Shares per trade equals $10,636.26 divided by entry price, rounded down to whole shares. Trade details. SOXL. Trade 1, 2:26 p.m. Buy 238 shares at $44.58. Cost $44.58 times 238 equals $10,610.04. 2:39 p.m. Sell 238 shares at $43.93. Proceeds $43.93 times 238 equals $10,455.34. Result minus $154.70. Approximately minus 1.46% relative to capital deployed. Approximately equals minus 65 cents per share. Holding duration approximately 13 minutes. 226 right pointing arrow 239. Daily P&L and net asset value. Daily gross P&L minus $154.70. Daily account return minus 1.45%. Relative to starting balance $10,636.26. Latest account balance NAV $10,481.56. Index and market recap. U.S. equities overall. Three major indices collectively pulled back, based on market observation. S&P 500 minus 1.17% closing at 6,771.55. Nasdaq minus 2.04% closing at 23,348.64. Dow minus 0.53% closing at 47,085.24. Small cap Russell 2000 minus 1.8% closing at 2,427.34. Market risk appetite significantly suppressed. Semiconductors and high beta. Philadelphia Semiconductor Index, SOX, fell approximately 4.0% on the day, based on market observation, with chips and big tech leading declines, creating obvious headwind for SOXL. Palantir pulled back significantly despite solid earnings and guidance, reflecting high valuation plus profit-taking. Sentiment shift. Nvidia also weakened. Interest rates and dollar. 10-year Treasury constant maturity yield around 4.1%. H.15 shows the 3rd of November 2025 at 4.13%. Based on market observation, dollar index hit near 3-month high. CME Fed Watch shows market bets on December rate cut dropped from approximately 94% last week to approximately 65%. Futures and volume. NYSE, Nasdaq declining issues significantly outnumbered advancing issues, based on market observation, with price chasing low win rate today. Breadth and volume coordination poor, more appropriate to wait for volume recovery plus structure resonance, second confirmation. Today's news. Macro and policy. Due to federal government shutdown, official economic data releases limited, with market turning attention to private data like ADP and subsequent PMI, ISM, based on market observation. December Fed rate cut expectations significantly cooled. Industry and corporate. Wall Street bank CEOs warned of potential pullback risk, 10 to 15% level, valuation pullback, correction, became market narrative, based on market observation, suppressing risk appetite with tech heavyweights under pressure. Market structure: dollar bias strong plus rates elevated plus tech, chips weak plus breadth deteriorating environment creates obvious headwind for SOXL. Market sentiment shifting from AI heat to valuation concerns. Quantitative summary: number of trades 1, win rate 0/1, 0%, daily gross P&L minus $154.70, daily account return minus 1.45%, latest account balance $10,481.56, average holding duration approximately 13 minutes. Execution and review highlights: disciplined execution. Entered according to predetermined signals, stopped out near preset loss threshold when no volume continuation appeared, with 13-minute quick stop loss of $154.70 maintaining good daily drawdown control. Market assessment: today's environment. Dollar bias strong plus rates elevated plus tech, chips weak plus breadth deteriorating, with SOXL facing headwinds. SOX fell approximately 4.0% today, creating significant pressure on 3 times leveraged SOXL. More appropriate to wait for volume recovery plus structure resonance. Second confirmation, avoiding chasing bounces in weak intraday trend. Strategy reflection: 2 consecutive trading days, day 56, 57, both stopped out with cumulative loss of minus $226.97. This reflects that in environment with unimproved market structure and discontinuous volume, even when signals trigger, price continuation remains weak. Need to raise signal quality filtering standards. Observation focused: account balance has pulled back from peak of $10,708.53, day 51, to $10,481.56, drawdown of approximately 2.1%. In weak environment, maintaining quick stop losses avoided larger losses, but also need to reflect on signal quality filtering mechanisms. Closing thoughts: day 57 in dollar bias strong plus rates elevated plus tech, chips weak plus breadth deteriorating environment. Single test trade stopped out according to discipline, controlling daily drawdown to minus 1.45%. Account balance decreased to $10,481.56. Worth noting, this is second consecutive trading day with stop loss. Day 56, minus $72.27. Day 57, minus $154.70. With cumulative 2-day loss of minus $226.97. From day 51 peak of $10,708.53 pulled back to current $10,481.56, drawdown of approximately 2.1%. This raises a question worth considering. For systematic trading, when experiencing consecutive stop losses with market structure continuing to deteriorate, such as SOX down 4% in single day, Wall Street warning of valuation pullback, how does your system determine whether to pause trading or adjust strategy? Continue executing per signals and accepting consecutive small stop losses, or raise signal quality filtering standards waiting for clearer market stabilization signals? How do you balance maintaining execution discipline versus avoiding overtrading in unfavorable environments? Moving forward plan: maintain signals before positions subject to risk control. Use SOX and volume resonance as participation prerequisite. Prioritize small position trial and error, segmented trading to smooth drawdowns. In weak environment, consider raising signal quality filtering standards. If this recap is helpful, please like, save, and share for support. Also welcome to share your strategy adjustment experience in consecutive stop-loss environments in comments. Follow the account to not miss daily live trading recap updates. See you in the next video.